let's start with quick introductions. Tobias, since you are the host, why don't you start at that end and then we'll work our way down. Tobias, over to you.
Thank you, Richard. And thank you for allowing Poul Schmith to host this event. I'm a lawyer and I'm a partner here with Poul Schmith. I'm quite a newcomer to this firm. I've been here for less than a year, but I had the same experience when I entered the building. It looks perhaps a bit sinister from the outside, but once you get in, it's a completely different experience. Poul Schmith is a bit of an odd size in terms of a law firm. We were founded in the mid-30s, but catered and acted exclusively for the Danish government, the Danish state. And some 10 years ago, we started to expand since that exclusive relationship ended. We are still working on a preferred basis with the Danish government, but we have then expanded our practice to include private clients, and that's been going on for the last 10 years. And that was why I joined the firm as well. It's Denmark's largest law firm, but it's a very corporate law firm at the same time. But you get to be entrepreneurial since we are expanding on the private clients, which is the reason that I wanted to join the law firm. And in particular, we're working with real estate, M&A, but also infrastructure and alternatives, which is the sort of a big thing. I've been combating a cold for the last couple of days, so I'm sorry my voice is a bit rusty, but hopefully it'll last through the session here.
Well, we'll be interested to see that when the singing starts. Yes, that'll be, which isn't on the programme, but we'll be able to, and anybody is feel free to join in. Dominik. Dominik, over to you.
For hosting us. I'm the one who's trying to convince you that healthcare and senior living in particular are the asset classes to go to at the moment. Apart from that, I'm a partner at Periskop Opportunities as part of Periskop Group based in Berlin. It started off a couple of years ago mainly with a focus on land banking and land development, and then evolved into asset classes where we see growth and resilience going into the future. And I'm there with my entity to, focus on more value-add and opportunistic strategies within these sectors, being logistics, senior living, and healthcare, and also digital assets.
Great, thank you, Kasper.
Yep, thank you, and thank you for having me on the panel. My name is Kasper, and I'm from Northern Horizon. And Northern Horizon is a specialized investment manager focusing a lot on the social infrastructure space, but primarily on senior living and the aged care assets. So we today we have two active funds where we own more than 150 care homes in the Nordics. Denmark, Sweden, and Finland is where we're active. Have local representation. I'm responsible for the Danish activities and investments, and also a co-fund manager for one of our funds.
Great, Christopher.
Great. So my name is Christopher. I'm a co-founder of Three Lakes Capital, and Three Lakes Capital is a local operating partner. So basically we support international capital that wants to move into the Danish market, but doesn't necessarily have the local know-how or resources to do that on their own. We represent strategies from core to value add, basically. And on a personal note, I have a background in finance, and I have had a sell-side stint at Catella Corporate Finance, and then spent 4 years at NREP as well. And then we decided to co-found our own company and sort of build on what we believe is the new cycle going forward, but we can maybe cover that.
Perfect. So we've got views from both local markets here, but also from international markets as well, because Dominik and Periskop very active in Germany, but also looking outside of Germany on an increasing basis. So we'll be able to pick up insights from what's happening in that market as well, and how that may reflect across here. And I'll also share some things from the living sector specialist events that we've done at Expo Real and throughout the year, in case those are useful. Let's just kick off, and maybe Dominik, let's kick off with you, just in terms of the last 6 to 12 months, let's say. I suppose, Where were we at the beginning of 2025? Where are we now? And feel free to pick up your general kind of sentiment as well as any specific ones.
Yeah, in 2025, I think we started off to a good year till Trump gave us a hard break in April, and then we had to recover from that till like almost the end of the year, really. And then I felt that with Expo Real being our main trade fair to get the sentiment of the market, we noticed a really a sentiment shift towards investing, mainly also into Germany, which we are focusing on. And I can tell it's accelerating. So we see good interest in the market. Till last year, we saw mainly what we call first movers coming into the market, like the big PE firms from the UK and the US entering the market with big tickets, but still, hesitant to go into new asset classes. But now there's this, and we see a sentiment shift, and we come to that later, I guess. But it's away from traditional asset classes into new asset classes, and they're warming up to that idea. So we're quite positive.
Okay, good. And Tobias, what's your take on that? Because you'll have seen it from a slightly different perspective here in Denmark.
I think what we've seen here is, of course, that the residential market has been very strong throughout the year. It started strongly. International capital is increasingly coming to Denmark with new players also arriving. We've seen a split through the country as well, where Copenhagen is definitely the driving factor. Such you have the second largest city as well, also playing into that, Aarhus. But otherwise, it is Copenhagen which is the driver. We have seen differences as well in the investment strategy, where you look at breakup cases as well. So you are breaking up existing residential properties into individual units simply for the fact that it's a better business. So in the more, shall we say, affluent areas of Copenhagen, where price per square meter exceeds, let's say, 100,000 per square meter, the business case, rather than selling an entire property, is you simply break it up in individual units and sell it to private consumers. Otherwise, I would say that financing is still a bit of a challenge since the LTV values are a bit on the low side, but that of course goes to say that it's a more solid market once you have once the transactions are completed. And Danish pension funds as well have been very active in the Danish market. It seems that in the larger Copenhagen area, it's a buy strategy. Get first to market, secure your assets, and then there is a belief, there's an assumption that the rents will increase. So it's a question of getting the asset in place.
Okay, good. And Kasper, maybe from your perspective as well, you're seeing it across different markets here in specifically the Nordics.
Yeah. So I think on a fundraising side, it's been a fairly positive year for us, and that's in a market where it's still super difficult to fundraise and raise capital for core strategies. But I think overall we see a tendency across the world that this niche asset of both senior living and the healthcare market is getting a bigger share of some of this, and that is the interest that we have seen. We see a lot of European, very big institutional investors that see our product as a very solid core strategy that they believe in, focusing on, of course, the demographics that we all know. People get old, and 10 years ago, we talked about that it will soon come and it will happen, but now we're standing in the middle of it. So the number of elderly people is really high, and that increases the demand for both aged care assets and senior living opportunities. And right now, at least, we see a lot of institutional capital that want to seek that. And last year we raised 220 million euros in capital, which is a significant number for us. And we believe that this year we will get even higher numbers. Have a lot of good dialogues ongoing with big clients, and we have come into a place now where we're getting a ticket size that we never thought that we would achieve. A big German institutional investor that invested 150 million euros in one chunk. That's very significant, and a couple of investors looking into doing the same right now. So that has been interesting to see. And then more on the investment side is then still balancing, finding the right opportunities. I think you always see a market that as soon as they believe some capital is coming in, then yields are dropping before we ever get to do the investments. So now we raise the capital for our strategy, and now we have to deliver on that promise, and we can't do that with too low yields. So that's kind of the next interesting phase.
And just to pick up on the capital raising side there, Kasper, I mean, you mentioned German investors there for the first time coming in with a significant chunk of money. Are you seeing different types of investors becoming more interested, I suppose, in this specific asset class, but also specifically in the Nordics?
I think they're moving a little bit from other markets to the Nordics. I believe some of these, especially the German investors, but also Dutch pension funds, they have historically focused on a very big German market in this space. But we kind of have been able to convince them that there is some interesting things in the setup we do in the Nordic, where it's more government-backed structure, where in Germany you have the insurance model for both the aged care sector and more of the healthcare assets. So that we have decided in the Nordic markets to finance this through taxes. That has proved to be an interesting concept, and then attracted some of this capital. Then we are also seeing we got a couple of investments from Japanese investors who are then looking into the European markets and seeing the Nordic markets again as an interesting hub. It's still low numbers, but there's a lot of potential big tickets out there as well that is interesting to follow up on, and we're curious since we got the first one, and then we want to explore to see if more could come from this side.
Very interesting to see Japanese capital, even in small amounts, beginning to appear here in the market. Christopher, let's pick up with you as well. Yeah. You're obviously looking much more at the local Copenhagen market, so we'll get a sense of what's happening here. But again, any of those elements, like if you're seeing different investors coming in, what are you seeing in terms of changes over the year?
Yeah, so I think I can echo a lot of the things that have already been said regarding the dynamics. I think the main theme here is huge competition, few assets on the market, and sort of an overall question of how low can we go. I think if you take a step back and look at why is there such a fierce competition, in the dialogues we've had with the international capital, it is a question of basically Copenhagen being the hottest topic for resi investments due to, Euro-pegged, cheap financing, structural undersupply, strongest economy in Europe right now, and all the other sort of viable alternatives underperforming right now. So UK is not doing super well. Demographics in Germany and also economics in Germany are not looking favorable. So all of a sudden, this huge pocket of capital is all sort of moving into a kind of small market, and a lot of that is focused around Copenhagen. So we are seeing, a lot of investors that are from initially being more opportunistic capital, now core money is really moving into into Denmark from Germany especially, and also they're now moving out the risk curve as well. So because there's such a fierce competition for standing assets, and you've seen, prices on even locations like Brambring and Glostrup and sort of western Copenhagen municipalities now in sort of a range of 4.25, then they're moving out the risk curve. So core money is now doing forwards or wants to do forwards, also longer forwards, and Core Plus is now willing to do forward funding, which is a new
forward development.
Forward funding, basically.
Yeah. Okay.
So we're seeing sort of that sentiment right now. And the reason for Copenhagen, I think, is quite obvious, but that's the primary growth engine for Denmark. I think if you look at the numbers, I think it's like 40% of all jobs that have been created in the past 15 years were created in Copenhagen region. And looking at it from a liquidity perspective, also for international capital, that's where the majority of the transactions happen. And if you are an international investor, that's sort of the risk perspective you also need to look at. Is there an exit liquidity?
Okay, good. And thank you for the reminder about the UK market. That's very kind of you. Although I will say at the INREV investor intentions, the Nordics were mentioned, both there and also, interestingly, in the panel at the same EPRA event. So last week there was the EPRA event and the week before that was the INREV event. Nordics were mentioned in both of those. UK came top in the INREV one and Germany second, actually, quite interestingly for you as well, Dominik. So investor intentions sometimes not necessarily matching what's happening in the market in the current way. Let's pick up a little bit on the demand side and the fundamentals, because we've mentioned a little bit about tight competition in the market, but also, over the last 5 years, we've been running sessions which are looking at the living sector across PRS, student, senior. In all of them, there's a lack of product in essence, and that only seems to be getting worse rather than better. So I'd be interested to hear the situation in Germany, Dominik, but also then what we're seeing here as well in this region.
Yeah, I mean, you mentioned it, and that's the easy part for our strategy. I mean, there's such an overwhelming supply and demand imbalance. Yeah, also in Germany, I think in other countries as well, like in the UK, has been for many years. But in Germany, it's growing. Yeah, we have an undersupply of roughly 200,000 units per year, and that has been the case for almost 10 years now. So we have, I guess, an undersupply of roughly 2 million units, and there's not we don't see a lot of supply coming our way at the moment. So that's really the easy part. I think no one needs to get convinced that residential in general is a good place to go to. Yeah? In Germany, there is demand, and you will always fill your projects. So the leasing risk is almost not existing, and you have certainly no exit risk for these assets as well. So that's why we are in our senior housing strategy focusing on what we somewhat PRS schemes. So we are actually what we want to do is build residential multifamily houses that are suitable for senior residents with a service component to it, with an operator just taking a small communal space, but then providing services to the residents. So we're pushing senior living from the kind of care home sector into the PRS sector. That's our idea, and I think the fundamentals are so strong that this is something we should be able to pursue. Yeah.
Okay, good. And the same is true here. I mean, you mentioned as well, Kasper, there the demand, but what does that look like in terms of numbers? I mean, where are we in terms of the deficit?
It's very large numbers. So I believe in Denmark we're talking about having an undersupply of roughly 7,000 to 10,000 beds in the care home market, and then when you go to the senior living, it's much bigger numbers. It's not so settled in terms of what the structure is and how the operational model should look like from a Danish perspective. We have seen some surveys indicating that this is a very interesting topic for a lot of people. So it's definitely a sector where we see some future demands. Where it's easier to trace is kind of the care home market, and it's 7,000 beds in Denmark, and it's even more in Sweden, and roughly the same numbers in Finland where we are. So you can say since the inflation crisis, the beginning of the war in Ukraine, construction slowed down. It's been more difficult to have a development case that worked. So you have seen in the whole living sector very low new supply coming in, and this is happening at a point where the demand is growing rapidly. So definitely a very big structural undersupply in this sector. Then there is a little bit of differences in Denmark, Sweden and Finland. You saw a bigger movement in prices in Sweden and in Finland. The Swedish market was maybe a little bit heated, but just an example, we lost a bidding competition for a care home at a 3.3% initial yield back in 2022 or something like that. And that same development came on the market again a little bit later at 4.5. So that's kind of a very big change, where in a Danish context, the movements have been maybe 25 basis points, and we're almost back to before we were before. So we didn't see that big change in a Danish market, but the Finnish and the Swedish market make bigger corrections. And that's then where you also have the hope that you make a better deal now. So a little bit more attention to these two markets, and you need to be a little bit aware of the risk in a Danish context, and it's more tight.
Okay, good. Tobias, feel free to pick up on any of those, but I'd be interested to pick up on yours, because I don't think you mentioned it in the beginning. Because obviously you're seeing both the deals that come in and then fall apart and the deals that go ahead. So you're seeing what capital is on both sides. So are you seeing any particular new sources of capital or changes in the types of capital or the strategy coming in here? What are you seeing in terms of particularly the living side?
In the living side, well, we see typically at least two types of capital. One, of course, being institutional, if we're discussing foreign capital coming into Denmark, and then the other capital is family money. Denmark being a safe haven, so the strategy is perhaps more a strategy of wealth preservation rather than making, shall we say, large profits in that sense. The Danish market is a very transparent market. I think it's number one in terms of anti-corruption. So transaction costs are very low as well. Financing is cheap. It may be at relatively low LTV rates, but still the capital is cheap. But when we see family money coming to Denmark, which is an interesting investment, some of these funds come from, shall we say, more volatile countries where the economic climate is not as solid as the Danish. So you move your funds from a volatile economy where the political climate may not be so stable, and you put that into a more stable climate. For instance, we've been working with South African capital as well, where the currency fluctuates from day to day, and from that point of view, the Danish market is a very solid, stable and safe market, and particular if you're operating within the residential market as such. What we've seen as well during the year is that transactions take much longer as such. It's been the nature of the transactions tend to change. So what we would have as due diligence findings when we start the transaction, we would solve that during the transaction. But what we would have as non-findings when we started, that turns into findings because things change during the transactions. So where we would normally close a transaction between, say, 2-3 months, it may take up to 6 months now. Also due to the processing of financing takes much longer, compliance checks, and so forth. So it's a much more diligent process, and it is simply a longer process. And I also believe this is due to the very compressed yields that we are working with. So relatively small fluctuations influence on whether you can complete the transaction or not. And also, as you pointed out, Dominik, we were set to go on a big start from 2025, and then Mr. Trump arrived with his menu chart on the various tariffs, and it all just fell to the floor quickly.
Yeah, it's interesting. I mean, previously in nearly all of these Outlook ones, I've had a question which is specifically on geopolitical risk, and of course, sitting here in Denmark, very aware of the geopolitical risk that Trump has introduced here. But increasingly, it's barely worth putting it in as a question because it's so the instability is there that really you almost have to work around it rather than try and second guess what's happening. And again, interestingly, it wasn't mentioned in either INREV or the EPRA presentations because it was, right, well, let's talk about what we can do, what we can influence. So that's why I haven't particularly picked up geopolitics and what's happening there in this one. Does anybody want to pick up any of the, I mean, I'll be interested to drill down a bit of the difference, because you mentioned there's some of the operational differences and the differences in terms of what government schemes, how that works. And I'll be interested to see the difference between Germany and the Nordics particularly. But does anybody have a view on areas like student housing, micro-living, those kinds of topics, which are quite a big focus elsewhere in Europe? So interesting to pick up anyone's ideas on those. Yeah, go ahead.
I can comment on that. So maybe starting sort of with the structural undersupply in Copenhagen in general, and that's also where micro-living is a key focus and a theme that makes sense. So I think you asked about general resi undersupply, and when we look at the numbers, at least we can see during the past 15 years, there's been 20,000 units lacking compared to the household growth in Copenhagen. And then progressing that forward and looking at sort of the demand going forward. So Copenhagen is roughly going with like 5,000 to 7,000 people per year. So that translates into maybe 3,500 new homes, and construction is 70% down from the peak. So there's a huge mismatch going forward in that dynamic, which of course then drives up rents and condo values and all the current dynamics that we're seeing right now, basically. And when we look at the numbers, we expect somewhere in the range of 5,000 to 3,000 units lacking over the next 3 years as well. If we zoom in then on micro-living, that trend becomes even worse. If you go back to the 90s, from the 90s and then until now, you basically have 8,000 fewer units that are below 60 square meter because they had a redevelopment scheme for small units in Copenhagen where they had to clean up all the old stock. At that same time, that target group has grown by 90,000 people because the majority of population growth in Copenhagen has been young people. Surprise, surprise. And during that period, the municipality is focused mainly on creating large units to keep the families in, because the families usually have better incomes, pay higher taxes. So there's a huge mismatch between what is being demanded and then what is being built due to some municipal sort of and zoning requirements. That has created a price dynamic where the square meter rent for small units is significantly higher than for larger units. And also you're seeing rental growth, at least going back to the last 3 to 5 years, where this segment completely outperforms traditional traditional multifamily. So we're seeing plus 5% year-on-year growth in that segment, whereas traditional multifamily is around 3%. And also you're seeing it trading at a yield spread which is 25 bips higher than multifamily. So all those dynamics we believe sort of feed into that. That's a place where we want to invest thematically into that undersupply and that sort of dynamic going forward.
Okay, good. I mean, we've mentioned quite a bit that financing seems to be less of an issue, but at the same time, we don't seem to have this undersupply being tackled. And if anything, Christopher, you're saying it's got worse, not better. So is there financing available for development? What are the blocks here? Is it the municipalities? Is it planning? Is it capital not looking for the development side? What's the situation?
Shall I pick on that? Yeah, I mean, if I look at Germany, there is financing as such is scarce. Yeah? It's just limited in general. So if you have a limited source, you're looking for the kind of more or less risk-free proposal first. So that's the shift in sentiment in general. So development is not the focus of traditional banks, and now we see a lot of alternative lenders stepping in. So that's happening at the moment. Yeah? So I'm quite positive that within the next 2 years this gap will be bridged in Germany, but it will take some time. Yeah? And we are as well. We're looking at partners for programmatic joint ventures in the sector to help us bridge that gap. Yeah? For development and forward funding deals in the residential sector and senior housing sector, and that has to happen. So, but I'm quite positive the market will always help itself. It will take some time, but I already see a lot of alternative lenders entering the market. It's a great opportunity.
Okay, good. Yeah.
So I think from sort of the bank side, there's a huge willingness to finance resi construction in Copenhagen, and also quite fierce competition for that between the banks. So there you can get quite favorable terms, and depending a little bit on the exit stabilized exit yield, you can get some in the range of 60 to 70%. And also you have alternative debt providers now stepping in with also quite favorable terms and more flexible structures, sort of pro rata lending and stuff like that. So I think that is not really the issue here. Where you can experience a little bit of an issue is on stabilized assets, where yields on some of them now are down at 3.5%. Then there's in Copenhagen, there will be an interest coverage ratio that starts impacting your LTV levels. So there you begin to see maybe that you can only get somewhere around 50% LTV. But in general, I would say for resi at least, financing is a non-issue in Copenhagen.
Okay, so Tobias, what are you seeing in terms of the challenges there? Is this lack of opportunity? Is it land is too expensive? Is that there's not the land available, or that there's inflexibility in sort of transformation from one asset type into another? What do you see as the blocks here?
The major block, I think there is land to be developed. There is greenfield land in Copenhagen. You have the old harbour areas, particularly in the northern harbour and the southern part of Copenhagen and the surrounding municipalities. It's a structural issue to a certain extent, where planning is not being developed sufficiently quickly. We seem to run into a number of bottlenecks with various municipalities where if we made larger zones for residential construction, we could build more and more quickly at the same time. That's part of it. Also, there is a reluctance in Denmark to build the high rises as well. So you're very focused on building, say, buildings of 5-6 stories. It's an aesthetic discussion, of course, whether you like high rises or not. But of course, you can use the land more intensively if you build higher. That's of course logic. Construction prices are also increasing. So when you build in the more affluent parts of Copenhagen, where there's a high demand for, shall we say, more expensive living, that's probably easier. When you go to the more, shall we say, less affluent areas, it's a bit more difficult to make numbers work, because construction is more or less the same price. We're seeing changed legislation as well, where in Denmark the various municipalities can demand that 25% of the area is used for council housing. So you need to factor that in when you do your calculations as a developer. It's a completely different business plan. Recently, we also passed legislation that the municipalities can demand that 25% of the developed residential is turned into condominium, so you have to do a breakup case as the developer. And of course, if you go to the very expensive areas, that's not an issue. If you go to the less expensive areas, that's an issue, because the cost of construction, can you actually sell the units afterwards? Do you have the buyers for the units? Will the banks finance the purchases? It's an open question, and you don't like dark horses when you're doing these kind of calculations as a developer.
Okay, good. Christopher, you want to pick that up?
Yeah, I think just commenting first on Copenhagen and the supply situation there, it seems like the municipality has put up a lot of roadblocks for what can actually change something, and that's sort of the large development schemes around Copenhagen. So you've seen, for example, Jernbanebyen, which is a huge development scheme, has been paused, and other have been deprioritized. And I think that dynamic then feeds into, you can't just do it plot by plot. And also then By Havn also is, a large institution that has a lot of land available, but is doing it plot by plot. So when you look at the demand side versus the supply side, this methodology is too slow, I would argue, in order to alleviate that. And that, coupled with the fact that they only want to build larger units, again, makes the supply side slower to sort of catch up to the demand side in Copenhagen. But I do think that there's quite a lot of land available west of Copenhagen, and you are seeing a lot of developers now making the numbers stack up in that calculation because of the rental growth that you've seen in those areas, with some of the citizens that usually had been target tenants maybe for Copenhagen moving out there and have another view on how much they can pay in monthly rent. So I think that is beginning to stack up, and that coupled with the fact that now you have capital that is even core and core plus capital that is willing to move out the risk curve and either finance or be the end buyer of those assets, I think you will see construction start to pick up in those areas.
And there's an interesting element as well, obviously, post-Trump 2.0, sustainability, the communications, everybody will have noticed across Europe, less so in some countries than others, but nonetheless the communication around that has changed completely. But of course, in this area, in the living side, you've got social impact elements to it, especially if you're in senior living and care, for example, but also student housing. You've also got elements like affordability, which cities are keen to drive as well. And decarbonisation is one of those ways of making a more efficient running building, which then supports affordability. So I'm just wondering how we're seeing those. Has there been a change in any way, or are you continuing to develop on those themes?
Yeah, I think we definitely have seen a big change in sentiment in the overall market, and a slowdown in the focus on some of the things that we talked a lot about in 2024, and that changed a little bit. For us, it's with these big institutional investors and very core capital, then there is still a very big focus on especially the E, but also the S and the G, and getting it all right, and that then we need to require that from the developers and operators that we're working with. It's less of a focus from the operators, I would say. They have enough to do working in a low margin business and being very heavy in number of people and staffing requirements and stuff like that. So that continues to be a focus within the aged care market sector. So we're not getting the big help from the operators that they're prioritizing this, but we have to do it. And then it comes a little bit down to some of the issues it gives us. We are not as focused around capital regions only. With this care home strategy, you need to be a little bit more all around the country. And the issue is here that to build these modern with high ESG standards facilities across the country, the construction cost is still high. We saw it increasing rapidly with the inflation in 2003 and 4, and we just never have seen it come down again. The growth has slowed a little bit, but still high construction cost. So that puts a pressure a little bit on, okay, then we need a certain rent to get this to work, and put a pressure on this model. So it's still there, I think. developers are trying to use the sentiment that it seems like everybody's loosening up on the ESG requirements to do a little bit less. We still have to demand it, want high standard certificates on everything we do, and try to keep the pressure on that.
And how's that playing out in Germany, Dominik? And also, plainly, you have things like rent caps and different things, regulation. Interestingly, from the discussions recently in the UK, the investor side was less concerned about elements like rent caps, so long as they were consistent and everybody could build it into their models. That actually, from their perspective, it meant that if they were already holding these assets, from a purely selfish point of view, it was more difficult for new entrants to come into the market. So it'd be interesting to get your take on some of those.
Yeah, I mean, talking about ESG, I think it's pretty similar in Germany. It's just been described. That the focus has shifted away a little bit, but we are, I mean, as Periskop and our strategies, we're very much focused on ESG for many reasons. And one is that ESG accelerated the shift from institutional money going into, for example, existing old stock residential into more modern type new build sectors. And that will continue. We are absolutely certain of that. And being a value add investor with a let's say midterm time horizon, we need to focus on exit liquidity. And if you don't have very good ESG credentials in your assets, then that asset will not be liquid. It might be a stranded asset in the future, and we're still convinced that it will come back. Yeah, ESG is there to stay with us for good reasons. Yeah. And on top of that, we obviously focus also on the S within ESG, a social component, an impact component for your urban environment, for demographics, for the environment you put your seniors in is also something that needs to be considered. In our strategies, it is, and it's there to stay for sure. Now talking about rental caps and regulation, I think it's accelerating even the focus on new build, because in the new build sector you are exempt in Germany from rental caps. But in the first place, renting the house at market really, and then afterwards re-renting it there is a certain cap, but it's not as relevant. And that's why there's again more focus on new build, and we just need to overcome the financing gap, as I mentioned before.
Great. Yes, go ahead. Yeah.
Just a comment in sort of the international investor perspective that we've seen is that from maybe 3-4 years ago, it was a key topic every time you met someone to discuss ESG, whereas now it's almost never mentioned anymore in the dialogues that we have. But I fully agree, it's sort of a downside protection play rather than a upside creation and value creation play. I think what we're being helped by in Denmark specifically is that the building code is quite strict. So the natural requirements that are being put forward for all developers will sort of hit EU taxonomy basically. But where we're seeing a bit more discussions right now in the deals that we are at least working on is that the DGNB standard, which is sort of the widely used standard in the Danish market, has changed the goalpost for gold, which used to be sort of the one that you would require. So there's been a lot of discussions regarding now that gold is basically the old platinum, and is silver then enough based on the capital that might have raised, targeting DGNB gold and sort of, so there are a bit of new discussions regarding these certifications and what is sort of the new normal in that space.
Okay, good. Has anybody, I mean, we've picked up on quite a few topics here, but if there's anything that we haven't picked up on, but you would like us to pick up on in the last few minutes of the focus around living, let me know. Just raise a hand and I will come to you, or stand up and shout, or whatever is appropriate to let me know that you've got a question. In the sort of last 5 minutes, I really want to drill down a bit more into where we're seeing the opportunities in your markets, because obviously you're experts in those specific markets, and I think it'd be interesting to share that. So whether that's specific geographies, whether that is specific whether or not it is, senior living, which means it is from this number of beds to this number of beds. So how we're seeing that. So let's pick up with you first, on Kasper, on that, just in sort of where you're seeing the opportunities. So if you were raising a fund with me, what would you tell me?
Yeah. So we're thinking about raising a new fund, and the idea here would be to focus more on senior living rather than the pure aged care market, where we have been fairly established and dominating, and where we see, at least in Sweden and Finland, a fairly mature market. I think the senior living sector is so much larger, targeting anyone maybe above 55 or just above 60, but that will soon be 1/3 of the full population in all these 3 countries. So there is an opportunity here. We haven't found the optimal solution. There's very little product available out there. People have been testing different concepts, and we have seen something that works, something that don't. I think what the challenge is from our perspective is kind of that thinking of including a lot of services, and thinking that we can see that there is a lot of wealth in this group, but they're not really willing to spend it. So from a Nordic perspective, people are kind of cheap when it comes to these things. We can sell them a good apartment. They will pay a fairly attractive rent level, but then they're not buying anything else. So finding that model, figuring out exactly how should the product be, I think right now the idea should be that you do something more all-inclusive within the rent, and then you don't have to charge anything additional, but that then comes with a limitation of how much you can include it. Some of the concepts that we have seen have then focused more on the facilities and the common areas. One interesting concept is these 5-story houses, where there's then apartments from 1st floor to 4th floor, and in the ground floor you have all these common areas, a small library, a place where you can eat and have a party, a gym, a spa, stuff like that. And if you can do that, what we have seen is that somebody is able to create that product at a decent price, then you attract a lot of people into it. But if you're starting to have a lot of staff included into that, then it becomes too expensive, and then it don't fit anymore. And I think we're all inspired by Australian concept, by US concepts, by senior living villages in Florida, and see how they can make that work. And people have thought for some time that this is where we will end up. It will take a long time before we are there, so we need to find the right product. But when you do it right, it seems like there is a very big demand, and you have almost no vacancy. So there is a potential very good strategy in this space.
Okay, good. Christopher, where should we all be investing our money?
Yeah, I think there are sort of 2 bets that we would like to look more into. I think the first one is privatization still. As Tobias mentioned before, we like that strategy overall. I think the main issue here is that it's going to be hard to scale. All the most prime assets that would be ideal for this are on sort of institutional capital, long-term hands. They either want to execute this strategy themselves, or they don't want to sell, at least in our experience. But I think there are still opportunities within sort of the smaller ticket sizes to maybe sort of buy and build strategy within that segment. And we are still quite firm believers that the condo values still have a slight way to go based on what we can see in terms of supply, and then the demand side, who the buyer pool actually is, and how much money they still have. So we're quite bullish on that overall. And then micro living, as mentioned before, also a strategy we want to pursue. Quite focused also on the operational risk, and sort of not applying a US model to the Danish market, because simply the costs are different. So focusing in on what's basically the key demand and key requirements for that. But I think in general, what we like about that, as mentioned before, is the rental growth is higher than what we see for multifamily. You have a yield spread, you have a higher churn, and that might sound a bit odd that that's a value-adding element. But for us, in a market where the market rent grows quite quickly, then being able to sort of churn into that upside quicker than if you have a product where you churn 20%, that's a value add for us. And then the last point is that you don't see that basically privatization play pushing down the yields in that segment. So you have seen yields of somewhere in the range of 3.25 to 3.5 for multifamily that is suited for privatization. And that capital won't price micro living that way because you don't have that spread between the condo values and the micro living asset values.
Okay, great. Dominik.
We're looking at all the sectors where we have tailwinds from megatrends, and that's why we like healthcare. We like senior living in particular, being led by demographics. I mean, the demographics in Germany are working against us in some parts, but for these asset classes, they're clearly working in our favor. What we were also looking at is supply and demand imbalance, and we talked about that before. So in residential, you have that natural imbalance generally, but in senior living in particular, I mean, one number strikes me always is like how many barrier-free environments do we have in Germany in terms of square meters in residential, or on offer, it's less than 3% of residential buildings in Germany are barrier-free. So the demand starts not with care necessarily. It starts with a barrier-free environment. It starts with a comfort zone, so a service and a safe environment and a community. So that's where we see opportunities. Apart from that, we're strongly focusing on exit liquidity. So where is the future demand by institutional capital for these asset classes we're focusing on? And we are convinced that some of the niche asset classes that are regarded as niche asset class at the moment will be mainstream asset classes in the future. Look at student housing. Like 15 years back, that was a total niche asset class. It's now really mainstream. You have a lot of data points. People feel totally comfortable going into this asset class, and the same will happen to other asset classes, such as senior service living, in our view. Also medical centers, larger scale medical centers with ambulatory day clinics. That's another focus of us. We see that coming strongly, also because of a regulatory push. That's another scheme. If you follow the regulator, that's usually a good idea. Yeah. So that in general is what we focus on, where we're convinced.
Yeah, and it's interesting. We did the first student housing session that there'd been at MIPIM many years ago. And I chaired that, and I think there were 7 people there, including me. And 2 years later, there were 400 people there. So that does go to show how what is considered, and the first discussion was very much like there's been around senior living in some ways, which was that, yes, it's very interesting, but it's only something that you can do in a country. There's no possibility to have a regional strategy or a pan-European strategy for something like student housing. It's too operational. And all of those things. It's been interesting to see how the perception has changed over the market. Finally, from you, Tobias, so you can either tell us where you think everybody should invest, and we'll accept that you're a lawyer. So you can judge it as if I have come to you with a couple of schemes. You're sitting having a very fine Danish beer with me and telling me whether I'm an idiot or I'm a sensible person to be investing in this. But what are you saying? Where do you think people should be looking?
If I were to invest value add money, I think Christopher, you mentioned core assets. I think that's well covered. Conversions is still something that I enjoy doing a lot, particularly when you're working within the inner Copenhagen area. So you convert office into resi. I think there's a good case to be made for that, because you can generate either high rents or you can generate high sales prices in terms of a breakup case, and there is a sustainability case to be made as well, that you'll be reusing the old stock building, and these buildings or these developments typically have a certain charm to them as well, which you don't find in the newer constructions. The other point is that when you're looking on the surrounding areas of Copenhagen, if you can get options for larger pieces of land, for instance agricultural land, and you can get the time to develop the land, then you can, with relatively few funds, make a huge profit on the land, simply from the base of the land being changed from agricultural purposes to residential purposes, either like row houses, semi detached houses, and the obvious benefit of it is, of course, that the money you have to put down is a very small amount, typically an option premium. You need to spend, of course, on the actual development of the land in terms of architects, technical staff, and so forth, work with the municipality. It's a 3-4 year period, but the increase in the value of the land is astronomical compared to the actual invested capital. So those would be the main two areas, I think, if you were looking at making some, shall we say, more speculative profits.
Okay, great, thank you. We're now going to have a quick networking coffee / comfort break. And then we'll come back again to look at. We deliberately looked at two of the largest areas, I suppose, in terms of investor intentions, which is living and is logistics. And in logistics, we'll also pick up a little bit about the increased demand from defense, a little bit of how that may or may not cross over with data centers, for example. So some interesting things to come on that. But for now, if you could say thank you to our panel, that would be great. Thank you, everybody.